Hi, I'm James West. This is Midas Letter Money. My next guest is Rick Rule. He's the CEO of Sprott USA. Rick, thank you for joining us today.
A pleasure, thank you.
Rick, I'd like to talk today a bit about the idea of value destruction as a result of currency debasement and debt proliferation. So what we're seeing in the public markets right now is the very real fact that public companies in the commodities space have lost on average 40% of their value since September of last year. Yet a lot of these companies have actually increased the value of their assets through exploration in the same time frame. How do you reconcile that difference?
Well, I think there's a couple explanations. One explanation is the fact that the investor and the investment community, while they're sanguine in the very near term as a consequence of this incredible flood of liquidity, has the sense, and I think probably not an unwarranted sense, that there could be a psychotic break in markets, a la 2008. So people are nervous to make the type of commitments that they would normally make in the view of the corporate progress that you describe, as a consequence of a fear, not irrational from my point of view, that you could have a psychotic break in credit markets, a psychotic break in investment markets, as a consequence of the set of circumstances that we had in 2008. The other set of circumstances that you're having, particularly with regards to the natural resource business, is although it would appear that there's a lot of credit in the system, in other words, bank balance sheets are expanding, the trade would seem to be that banks are borrowing very low-cost funds from government and lending that money back to government. Right. They're taking on government debt with government subsidies, and they're not required to mark that debt to market. While in the private sector, attracting large amounts of capital for capital-intensive businesses, like large-scale offshore oil and gas development, or as an example, big copper porphyries, the type of debt financing and project financing that was available 6 or 7 years ago is no longer available today as a consequence, of government crowding out of private equities markets. So I would suspect that the set of circumstances that you're talking about, which is an accurate observation, is easily explained mostly as a consequence of government policy.
So then would you extrapolate from that then the idea that perhaps the public company model is for the near term broken from the standpoint of an investor, because as long as that risk aversion is prevalent in global markets, how is a company going to get from discovery to production if nobody's going to give them the time or the money to get there?
I think that's aggressive. In the first instance, in the near term, are public markets broken? Of course. From the point of view of an equity investor, while people would prefer to be paid in the near term, the markets don't care about their preferences. From my point of view, to the extent that long-term assets are on sale today, and they're very tough to replicate today, given equity conditions and credit conditions, the idea that I can buy long-term assets on sale because other people have a 3-month orientation while I have a 5-year orientation is not a problem. It's an opportunity. When I describe it as a problem, I'm talking about it as mankind's problem. For me personally, it's an opportunity.
Okay. Well, so then this market is good for an investor oriented towards the 5-year or longer timeline.
That's correct.
I see. So then the other question that would be begged by that then is, okay, so stocks have lost 40% of their value, very generally, sweeping generalization. It seems like things are at very good prices now, but would an investor be encouraged to participate now, or will things get yet much cheaper if we experience the psychotic break in public markets that you referenced a little earlier?
I think the answer to that, sadly, is yes and yes. In the first instance, if we take the investor down a notch to a speculator, which is the audience that I think we're talking to, the first thing that the speculator needs to understand is that the junior sector as a whole never has value, has no value whatsoever. If you merged every junior public exploration company in the world into one entity, Junior Explorco, that entity in a very good year would lose $2 billion, and in a very bad year would lose $10 billion. So we have to have a new financing metric, a price-loss ratio. How much would you pay for the sector? Would you pay 5 times losses? Would 7 times losses be appropriate? Or when gold is in favor, would you pay 10 times losses? What's interesting about the junior sector is that all the performance and all the value creation takes place in the top 10% of issuers. If you buy the sector from a broker, you will get broker and broker and broker. So it's interesting in the context of the junior resource sector that for successful speculators, very bad markets are a good thing. the resource markets are much more event-driven than they are market-driven as a consequence of the fact that the sector itself is valueless. And the price at which you buy opportunity is the determinant of your success over time, recognizing that your returns are event-driven, not market-driven, and hence using bad markets to lower your average entry cost into event-driven equities is the way you make money in junior markets. Very different, of course, from investment quality resource businesses.
Okay, so buy now or wait?
I think buy now with the sense that it's going lower. Two things are happening in this market. The very, very, very low equities prices that we're experiencing are lowering the acquisition cost for people doing takeovers. And while the market itself is going lower, the major mining companies will not wait for a market bottom. The major mining companies will take advantage of opportunity at prices they see. The recent acquisition of Tirani by IAMGOLD is an example. So while the overall market is trending lower, to the extent that you are able, to the extent that you have the analytical skills to put yourself in the position of the new business development person from Rio Tinto or Barrick and buy in anticipation of what they would buy, you will participate in the takeover cycle where if you are waiting for markets themselves to stabilize, you'll miss that opportunity. The second thing that people are missing is they're becoming increasingly risk averse in this market. And the high quality exploration stocks have absolutely been thrown away. They're being thrown out. You know, and it's very interesting that after 10 years of funding exploration, which is the amount of time that you have to fund it, we're coming into an exploration cycle. We're coming into a discovery cycle. Everybody wishes that exploration was a 90-day game, that you could buy a 10-cent stock and they'd make a discovery that would go to 40 cents. But of course, you know yourself, what you wish for is irrelevant. It's what you can have. After a 10-year cycle where billions of dollars have gone into exploration, we're starting to get the data that kicks off a discovery cycle. And the investors and the speculators are disgusted with exploration. So the sort of successful fringe of the speculation business, which is exploration, is, I think, poised for 2 or 3 very good years, just as the investment community is disgusted with it.
So then, but from what I'm hearing you say, the opportunity is going to be in that 10% where the real quality exists.
Absolutely.
And the risk is in the 90% that a broker is going to sell you and by which is going to make you broker.
Absolutely, absolutely.
Okay, let's step back to the macro picture just for a second then. And so if it was would you concur with the idea that the proliferation of debt and the debasement of the currency by the US government in conjunction with its banking sector, would you say that that was the successful execution of a strategy designed to create ubiquity of the US dollar in the financial system?
That's a bigger question than I am probably the right one to address. But I wouldn't give the United States government credit I wouldn't give them credit anyway, but that's a different question. I wouldn't give them credit for this sort of overarching capability. It's convenient to ascribe things to sort of malignant conspiracies. My own experience being an American citizen is that the alleged architect of this conspiracy can't deliver mail, can't educate the kids, can't operate airports. And the idea that they can't fulfill their basic roles with any competence whatsoever leads me to question whether or not they have the sophistication to pull off the manipulations that people like this accuse them of. I wouldn't be surprised in terms of their arrogance and malignancy that they would dearly wish they could do it. I just don't think that they have the capability to pull it off.
All right, Rick, fascinating conversation as usual. I'd like to thank you for coming over today.
Pleasure. Thank you for the opportunity.
If you'd like to learn more about Sprott or read more of Rick Rule's material, visit them online at sprott.com. And if you'd like to learn more about companies like Sprott, visit MidasLetter.com. I'm James West. This is Midas Letter Money.